Welcome to your expert tips for buyers and sellers. I'm Dolly Torres, your real estate broker and mortgage broker in the state of Florida and Kentucky, and I'm joined by Anna Garcia, CPA strategist. Welcome, Anna. How are you?
Hi, Dolly. Very good. How are you?
I'm doing well. So let's cut to the chase. I want to talk about cost segregation. What is cost segregation? I keep hearing about it, but I would love for you to explain to all of us what is cost segregation and how it actually helps real estate investors save on taxes.
So cost segregation is one of the most popular strategies, tax strategies out there for real estate investors, right? What a cost segregation. So let's start from the beginning. Let's say you buy a property, and you have access, or you're able to depreciate it, right? So it's an extra expense that doesn't really represent cash outflow. You're not paying for anything. It's just an added benefit of owning real estate. So usually for residential investments, you have 27.5 years that you depreciate that property, and a 39 for commercial. What happens with the cost segregation and how it's beneficial to investors is because instead of depreciating it over the 27 or 39 years, you're actually dividing and identifying what are the parts of the property. Like, for example, you have your the flooring, the carpeting, the windows, right, you split all of the different sectors of the home, and each one is depreciated on a much faster time period. So for example, you may have some areas that are depreciated over 5 years, some are 10, some are 15. So you see how instead of doing the 27, 39, you're now condensing it to a much shorter period, making it a much larger expense on your tax returns. And so it really, really helps lower your taxes.
So when would it be a good idea to do cost segregation and when might not be beneficial for the investor?
So cost segregations are perfect in the first year, when you bought the property, when you renovated the property, right? So the cost is really high. You have the majority of the value of the property, and so that's when we can take advantage for the most part. It doesn't mean that you can't do it in future years. You still can do it, and there's a special form that the tax preparers and the CPAs have to prepare, and to make sure that we don't have to amend prior years, because the depreciation will be backtracked to when the property was purchased. But ideally, it's in the first year of you renovating the property, purchasing the property. And when it is not convenient, sometimes it's not always convenient, right? So let's say that you're in high tax bracket. Let's say that you have a lot of passive income, or you qualify as real estate professional, which we're going to have a podcast on this as well, how to become a real estate professional. If you meet all those requirements, you're able to deduct real estate losses. And so in that case, it is beneficial. When it's not beneficial, when you pay low taxes, you don't have any income on your real estate. If you have losses, you don't want to do a cost segregation and continue to have losses that you're not going to use, because the cost segregation study has a cost. Like, you have to pay an expert to do it.
Is there a deadline for completing the cost segregation? And can it be done retroactively? I'm sorry.
Right. Yeah. So the cost segregation study is one of the few strategies, if not the only one, for real estate investors that can be backtracked, like retroactively done. Not backtracked, retroactively done. So for example, right now, let's say we're in March and it's year 2025. So we are completing the tax return for 2024. If you bought the property in 2024, you are allowed to do your cost segregation this year. And it doesn't have to be done by April before you file your taxes. You can do it. You have until you actually file your taxes, obviously, when you extend in October, right? So you have 10 months to complete the cost segregation and apply it to your 2024 tax returns.
Good to know, because as far as I know, there's very little things that you can do after the deadline. So that's a good thing. Now, how much can an investor typically save on taxes by doing this cost segregation studies?
In the first few years, like the first couple of years, you see 20 to 30% savings in taxes.
Okay, and then
So
there's,
by accelerating
I'm sorry, go ahead.
these deductions, right? Increasing your deduction, you're also maximizing tax savings. So we see a 20 to 30% increase in tax, like lowering your taxes.
Awesome. Now, is there a cost associated with the cost segregation, and can investor how can an investor actually determine if it's worth doing it or not?
Right. So, well, you could get an expert to tell you if it's worth doing it or not. We work with cost segregation experts who can analyze the property and tell you how much you could save. So that's when that at that point you determine if it makes sense or not. You also have so the cost to do a cost seg usually ranges from 5,000 to 7,000, depending on the size of the project, right? But we see the 5,000 being more of like the
The
starting
average.
point. But you
Yeah.
also have some free software out there that you can do on your own. And if it's a small property, maybe you want to go ahead and do it. Maybe you know an engineer who can help you. So there are free resources out there. And then when you go to the experts, it's usually in the $5,000 range. You may have some that are 2,500.
But as an expert, normally whenever a person or investor goes to do cost segregation, the cost benefit, it's a lot lower than the cost, it's a lot lower than the benefit that they will receive by doing this type of strategy under taxes, right?
100%. Anytime you do a strategy, you want to make sure that you're better off after the strategy than you were before. So even if you have to pay the experts, like your tax advisor, you have to pay the cost segregation expert, you're still going to have a benefit. You're still going to have significant tax savings that you can then reinvest into another property, another investment.
So let me ask, if someone was thinking of changing CPAs to, or they want to go to a tax strategist just like yourself, what would be a good starting point when someone should say, I'm paying so much in taxes, and it might be a good idea to go to a tax strategist to, kind of like to see an actual difference. Because as we have said in previous podcasts, not all CPAs are the same. Not all are tax strategists. And sometimes the cost could be a factor. Could say, hey, I'm going to be paying X amount of dollars more than what I'm paying now. Is it actually worth it? So what would be a good starting point? Once again, like if they're returning so much in taxes, when would be a good starting for them to look into a tax strategist?
Okay, so you mentioned
I don't
two
know, and I
great,
put you just right on the spot. I'm sorry, but I think it's important. I
these
think
are
it's
great
important for everyone
questions.
watching to kind of have an idea. Hey, if I'm already in this tax bracket, or I'm paying so much in taxes, I definitely should take this into account and look for more expert advice. Let's put it that way.
Yeah, so to answer that question, right, in terms of, like you said, how much they're paying the IRS, I would say if they're already in the $60,000 payment to the IRS, and what you have to look at is not what when you file your taxes the accountant says you owe 5,000, you owe 10,000. That's not what you look at. You look at the total tax that you paid, because if you're a W-2 employee, or if you made estimated payments throughout the year because you have a business, then that counts as tax payments, right? So if you're at the $60,000 on the line that says tax, total tax, that's when you are definitely going to start seeing the benefits of working with a tax strategist. But not only do you have to look at the total tax that you're paying, right? A lot of people are just buying a business, starting a business, and they have questions like, how do I set up my business, right? My entity. Because even, we're talking 60,000 and up, but reality is for some people, 5,000 is a lot of money, 2,000 is a lot of money, right? So if you're spending an extra 2,000, 5,000, and you still don't know if you're doing things correctly and you're paying more the IRS or not, then you can always get tax strategies. And like I always say, the cost of you not having a tax strategist is much higher than you hiring a tax strategist and having that expert advice that you need.
Good. Thank you for sharing, Anna. I really appreciate it every time you come. Taxes are so complex, and it's so easy to go to a tax preparer or to just a regular CPA and just do your taxes, get it done, and get it out of the way. But it really could be, you could be harming yourself whenever you don't do it right. Every time that I have changed CPAs, I remember them saying, hey, let's review your previous tax returns and let's see what they've missed. And they always miss something. So then we have to either modify it or do something to it. I'm like, when can we find a good one that can actually do the things all together? Until I met you, that you do are a tax strategist. And that's where I kind of learned there's a difference. So, guys, if someone, once again, you cover all the United States, right?
Yes.
Perfect. So, guys, if you want to get in touch with Anna directly, feel free to call her number. Or you can also email her at, Anna, what's your email again?
It's Anna with one N at Anna, B as in boy, Garcia, CPA.com. So
Perfect.
Anna at Anna B. Garcia, CPA.com.
Great. Anna, thank you so much for your time. I really appreciate you being here. Guys, if you want to know anything about taxes and if you have any issues on your taxes or you just want to more details, write us in our messages. I'll go ahead and in our next podcast, I'll bring it to Anna and she might be able to answer all of those questions for you guys. Thank you guys, and I'll see you next week. Bye-bye.
Bye, Dolly. Thank you.
Thank you.